Okay, today we're going to skip the big headlines and the official government reports. We are going deep, looking for the secret language of the economy, the clues that are hiding in plain sight.
So here's the big question. How can you spot a recession coming, maybe even before the experts do? Well, what if I told you the answer isn't buried in some complex spreadsheet, but it's actually all around us?
That's right, the clues are in your shopping cart, they're in your closet, and they're even towering over us on the city skyline. It's all about knowing how to read the signs. What we're talking about are unconventional indicators. Think of them as the economy's pulse. They're these little signals that show us how people are really feeling and what they're actually doing, way before any of that stuff shows up in an official report.
So let's start with the most personal level, our own choices. What do the things we decide to buy, or maybe more importantly, what we decide not to buy, tell us about how we're really feeling about the economy?
And that leads us right to a classic, the lipstick effect. The idea is pretty simple. When times get tough, we don't just stop treating ourselves completely. Nah, we just swap. We might hold off on that new car or that designer bag, but we'll still drop a few bucks on a new lipstick. It's that small, affordable little boost.
What's so cool about this is how the idea adapts over time. During the Great Depression, cosmetic sales actually shot up by 25%. Then, in the 2001 recession, the chairman of Estee Lauder, Leonard Lauder, noticed lipstick sales jumped 11%, and boom, he coined the lipstick index. But then the pandemic hits. Suddenly, we're all wearing masks, right? So lipstick is out. The theory just morphed into the mascara index. And now, in 2025, it's becoming this broader beauty index, where things like affordable K-beauty skincare are the new go-to indulgence.
Okay, so from a very visible luxury to a totally hidden necessity, former Fed Chair Alan Greenspan was a huge fan of another one of these quirky indicators, one he said gave a prescient, forward impression of recession. He was talking about the men's underwear index.
And the logic here is it's brilliant. Think about it. Underwear is a total necessity, right? But it's also completely private. Nobody else knows if you're wearing old underwear. So when people start getting a little worried about money, one of the very first and easiest things to cut back on is buying a new pack. It's a totally private sign of financial anxiety.
And this isn't just some old theory. Look at this 2025 index. It shows exactly where this is playing out. You've got cities like Waco, Texas at the very top, suggesting that people there are feeling pretty confident. But what this also tells us is that in other places, people are buying smaller packs or they're waiting longer to buy them. That's a super subtle hint of caution that the big national surveys won't catch for months.
And for what might be the most surprising signal of all, let's talk about the tooth fairy. Believe it or not, the average payout for a lost tooth has historically tracked pretty closely with the S&P 500. But look at this. Over the past year, the market skyrockets 26%, but the tooth fairy payout drops 14%. It's such a clear sign that even when Wall Street's booming, the people actually funding the tooth fairy, regular parents, are feeling the pinch at home.
Okay, so that's what's happening in our homes and our wallets. Now let's zoom out a bit to the industrial engine of the economy, the signals hidden in the stuff we make and the things we ship around the world.
And our first stop here is to meet Dr. Copper. It gets that nickname for a really good reason. This metal is so essential to everything we do that its price is said to have a PhD in economics. And you could totally see why. It is everywhere. Almost half of all copper goes into construction. Another huge chunk goes into our electrical grid. It's in our cars, our phones, you name it. So when demand for copper is high, it means the global economy is humming. When it drops, it's a major warning sign. But here's where things get tricky in 2025. On the one hand, copper prices are hitting all-time highs, mainly because of the huge demand from things like AI data centers and the green energy transition. But on the other hand, you have something called the copper-to-gold ratio. This basically compares industrial demands, that's the copper, to fear, which is when investors run to gold for safety. And that ratio, it's been trending down, which suggests that even though some sectors are booming, there's a real fear about the bigger picture.
Here's another simple but brilliant one, also a favorite of Alan Greenspan, the cardboard box index. The logic is just perfect. Almost everything we make and buy, from a brand new laptop to a pizza, gets shipped in a cardboard box. So if you want to know how much stuff is being made and moved around, just count the boxes.
Okay, now we're going to zoom out one last time to the biggest signals of them all. We're talking about the huge, ambitious projects that literally change the way our cities look.
This is a weird one. There is this spooky, uncanny correlation between the world's tallest buildings being finished and a major economic crisis hitting.
The Singer Building was completed right around the Panic of 1907. The Empire State Building and Chrysler Building opened just as the Great Depression was starting. The World Trade Center and Sears Tower were finished right before the oil crisis of '73. It's wild.
So, is this just a crazy coincidence? Well, not really. There's an economic theory behind this skyscraper curse. It works like this. First, you get a period of really cheap credit when interest rates are super low. All that easy money starts flowing into huge speculative projects that might not otherwise make sense, like, say, a record-breaking skyscraper. By the time that massive tower is finally finished, years later, that cheap money party is over, and the whole boom has become unsustainable. The economy is ripe for a downturn, and that shiny new skyscraper just stands there as a monument to how crazy things got.
All right, so lipstick, underwear, copper, cardboard boxes, and giant skyscrapers. What in the world do all these signals tell us when we put them all together? What's the diagnosis for the economy right now?
The one phrase that really ties it all together is latent anxiety. You see, on the surface, the official numbers like GDP might look pretty good. But underneath all of that, these quirky indicators are all pointing to a deep underlying nervousness. There's a big disconnect between the headline numbers and how people are actually feeling.
This all leads to three really big takeaways. First, how we feel comes before the official facts. The tooth fairy and underwear indices show us that people start pulling back on spending months before the data shows it. Second, we still want our little luxuries, we just get smarter about it, like swapping out champagne for Prosecco. And third, what we're seeing is a huge mismatch between old-school industrial cycles and this brand-new AI-driven boom. You know, if the official data gives you the economy's bones, these quirky indicators give you its skin and nerves.
And that really leaves us with a final, fascinating question. In a world that's being completely reshaped by AI and remote work, the old signals are going to change. So what do you think? What will be the next lipstick index? What's the next great unconventional indicator? Definitely something to think about. Thanks for joining me.